Welcome to Markets Now. I'm Michelle Rook along with Brian Grady with Pro Farmer, and it was a mostly higher day except for the cattle complex. And Brian, we got a big turn with some geopolitical news. Sounds like Russia maybe going in and a bomb hitting a Poland village.
Yeah, so apparently a missile or a couple missiles went across the border into eastern Poland, and we'll have to sort all that out. But the day started with hopes that the grain export deal out of the Black Sea Initiative would be extended, and it finished the day with news of a Russian missile going across the border into a NATO country, and so quite the tumultuous turn of events, and really did flip the script in the grain markets.
Absolutely. Uh, where do we go from here? Do you think the deal is off now, or what's the next step?
No, ultimately, I think that the deal will get extended, whether Russia's a part of it or not. I think that we've seen from the United Nations, Ukraine, and Turkey that there's a willingness to continue it. I think Russia ultimately will be in the deal unless something happens on this geopolitical front where it shows that maybe it wasn't a stray missile that went across the border. I doubt if that's going to be the case. I think it was just a miscalculation in terms of how that missile got across the border, and it wasn't intended for Poland. I sure hope that's the case because we don't want a couple stray missiles to lead to the beginnings of World War III, but it does really show the sensitivity of the market in this situation.
Mhm. A few other supportive features of the market today. Soybeans, NOPA crush was strong, and we also got some Mexican export business, right?
Yeah, so the NOPA crush number right in line with expectations, but up significantly from September, and we should see that seasonally as you move from September to October, and we should see those numbers rise, and that was the case at 164.5 million bushels, and so we anticipate that crush pace will continue to rise. The crush margins are strong out through next summer, and there's absolutely no reason that we shouldn't continue that strong crush pace. The demand news, soybeans going to Mexico, that follows up some recent sales that we've seen to also to Mexico, to unknown destinations, and then to China. So U.S. soybeans are starting to move a little bit. The export sales are fine. We need to get more movement in terms of the inspections. That pace is lagging a little bit behind the seasonality, but I'm not overly concerned at the moment. My concern on the export side lies with corn and wheat, both of which are woeful at the moment.
I mentioned to you that we aren't in the critical marketing time for corn, but you think we're too far behind to get really caught up here.
Yeah, just really a very poor start to the marketing year here in 22, 23, and just falling too far behind. USDA is going to have to cut its export estimate. Now, the question is whether or not we'll have enough domestic demand via corn for ethanol use to offset some of that. Some of it, yes. All of it, probably not. And I'm just really concerned that at the slow pace that we've started the marketing year with.
Well, and it's interesting that USDA didn't make any export adjustments to either wheat or corn exports in the last WASD. When are they going to have to rectify that?
Well, I think next month, to be honest, they probably should have made the adjustment here in November. They kind of punted, and I doubt if we'll see them punt again unless the export numbers really pick up over the next couple of weeks. But nothing tells us that that's going to be the case.
Let's talk about some technicals. Corn held where it needed to support today, right down at the 100-day moving average, didn't it?
Yeah, so it's been breaking down here the past couple of weeks. Dropped out of the bottom end of the sideways trading range. It's contained prices for a couple months, but Tuesday's price action got us back into a more of a neutral stance because of the big upside reversal, and we'll see. For the moment, it's neutral. If we take out Tuesday's lows, then it turns negative in a hurry, and we're headed into the lower half of that $6 range.
Soybeans, did the charts look better there?
Soybeans are kind of treading water. I don't think we had the big move up a week and a half ago or so, and then it just kind of leveled off. And so I think it's mostly a neutral stance from a technical perspective for soybeans right now.
And we kind of went down and challenged the bottom side of these trading ranges there too, didn't we?
Yeah, wheat is very similar to the corn market. I think you can't draw a whole lot of difference between the two of them from a technical perspective. Soybeans has the strongest of the three in terms of technicals, and corn and wheat have some work to do.
Now we have 15-year lows in terms of ending stocks on wheat, but it doesn't really matter with what you said here earlier about exports, right?
Correct. Yeah, we're just we need to move some wheat out via export channels, and it doesn't look like that's likely. We have obviously the Mississippi River issues will keep SRW shipments from advancing. We're diverting some of the soybeans because of the Mississippi River issues up through the PNW, which will limit white wheat exports and spring wheat exports, and so I think that it's going to be a struggle for the wheat market.
And let's talk about cattle. We ended mixed in the live cattle futures, but honestly, after the contract highs there, October 25th, we've been in consolidation mode, and it's been kind of disappointing for the bulls.
Yeah, I think the biggest disappointment right now is that December futures are trading below the cash market. That shouldn't be the case, to be honest with you. The cash market is on an upward trajectory. Uh, the market ready numbers are tightening, and everything tells us that the feedlots are current, and yet the futures are taking a very cautious approach to that, and so trepidation in terms of traders just tells me that that they're not real super excited about that market at the moment.
Yeah, do you think cash will be steady this week, higher, what?
Well, if we weren't buying for a short and kill schedule next week, I'd say definitely firmer. Last week's cash trade ended up to be better than what was anticipated all the way through. Friday's action pushed us higher for the week, only by 73 cents, but still higher.
Yeah.
I think we will see a firmer tone again, and then I think we'll see a firmer tone definitely coming out of the week of Thanksgiving. So the short term and even into 2023, I'm bullish toward the cash cattle market.
Gotcha. What about the hogs? Obviously, we had some technical buying here, especially after the higher weekly closes last week, but how far can you move that market because cash isn't really participating?
Yeah, so the December futures are trading at just what would be a normal discount to the cash market at the moment. So I would call that a neutral stance. The traders aren't overly pessimistic and they aren't overly optimistic. They're just basically neutral. So they see about a $3 decline in the cash index over the next month before the December contract expires. Once you get past December, then it starts to perk up from a seasonality standpoint, and we should see some price strength as we move into early 2023, into the middle part of next year because of the seasonalities where we see the hog numbers back off.
All right. Always appreciate your insight. That is Brian Grady with Pro Farmer and Markets Now.